What's going on, guys? So maybe it's time to start looking at other avenues, other stocks, other industries to trade. Normally, I trade tech, I trade high beta stocks, Tesla, Amazon, Google, Facebook, Netflix. You get the deal. But what I'm looking at here is that could we be having a rotation? Ever since we had that big run up on the triple Qs and the Nasdaq, the first week of April, we've kind of just been on a slow, steady bleed down. Okay, so one of the stocks that I really want to look at, a few stocks that I want to look at, is going to be some of these retail stocks, some of these reopening plays, some of these spend your stimulus, some of these, spend your tax money plays. First one's going to be Target. So if you trade any of the the speculative stocks, any of the growth stocks, any of mega cap stocks, you can see that they were all down. Microsoft was down today. Twitter was down today. Square was down today. The triple Qs were down today. Peloton was down today. Netflix was down today. Tesla was down today. Amazon, Google. You get the story. You get the idea of what I'm trying to say here. So until the triple Qs can sort of work themselves out, maybe we need to look at taking some cash flow off of these other industries that are strong. Okay. The first one that I've got pulled up here is Target. So as you can see, ever since the beginning of March, actually, see, like, what kind of makes me upset is that I don't really look at these stocks because they're very, very boring. The daily true range on them is not very much. They're going to move up $1. They're going to move up $2. They're going to move down $2. They're not really exciting. They're what I like to call they're boring plays. Okay. They're boring stocks. To me, these are like long-term plays. These are like long-term swing plays. But I mean, if I was really like looking at these stocks, at these reopening plays, at these retailers, realistically, ever since the beginning of March, when this really, started to, it really sold off here and then it kind of found the base and then it had 1, 2, 3 candles up. Maybe if you were looking at it in this range at 180 and then you get the break above the 50-day moving average, could have been an entry point here at 187. I mean, we're looking at it a month later and the stock is $212. So, I mean, tell me who wouldn't want to take, 10, 15, 20 points on a swing for a month. That's a big potential play. That's a big move. Okay. Yeah, it's not going to be as flashy as, Tesla running up $50 in a day. However, the game that we're in right now, you got to take base hits. You got to take what's on the table when you can. So if right now, the NASDAQ and the tech stocks, if they want to consolidate a little bit, if they want to go back and test some of these lower levels of support, then maybe we need to look at some of these other avenues. Okay. So Target today was up $4. It was up 2%. It closed at 211.28. The high of day today on Target was 212.82. I'm just going to make this very simple. Let's look for continuation. As you can see, we broke out of this consolidation period here. We hit a high of 210.82 and then we dipped down a little bit and now we finally broke out of this channel. We cleared out this supply zone here on this upper Bollinger Band. We touched a high at 212.82. So let's put this on the watch list for tomorrow. Let's look for a break over 212.82, a confirmation for a little bit of continuation. Another stock that I want to look at, again, Walmart. Okay, so as you can see, Walmart broke out from the 50-day moving average. It was trading below the 50-day moving average for a very long time. It broke out in the beginning of April and is after the breakout kind of just traded around sideways. Today broke out of this channel here at 141.81, put in a high here at 142.80. Let's put Walmart on the watch list for tomorrow. If this can clear out 142.80, maybe we have a potential swing here to this channel at 147.61. Maybe if you're playing on the option side, let's go 1 month, 2 month out on your expirations there. Another stock that I want to look at, Home Depot. This stock is just a monster. So a little bit oversold here from the end of March all the way until the end of April. But I mean, when Home Depot confirmed the 50-day moving average right here on March the 12th, The price on the stock was $273. Today, it currently sits at $331. Insane move. Like, where am I at? Like, why am I not looking at these stocks more often? Maybe I should start looking at these stocks more often for like long-term swing plays. Okay. So we came out of this channel here. The break was going to be at 329. Let's call it 330. Today, we touched a high of 331.62. If the market on the NASDAQ is weak again tomorrow, maybe we get a confirmation of 331.62. Let's look for a continuation entry point, probably 332. Let's get some 1 month, 2 month out expirations on that. Dollar Tree, DLTR, Dollar Tree. Yeah, Dollar Tree. Okay, so Dollar Tree right here has a high of 120.37. Okay, 130.27. It is coming out of this lower channel here. It did reclaim the 5-day moving average as well as the 20-day moving average. Also just confirmed the 10-day moving average. I think that if Dollar Tree can get a confirmation of today's highs of 116.87, that it potentially has room to 118. And if it can hold 118, maybe we see 120. Those are a few stocks on the retail side that I really wanted to emphasize and look at. Let me see if I'm missing anything. I think there was one more that I'm missing here, but let me just check my Discord because I know I put it in there. Let's see here. Oh yeah, another great run. So FedEx, FDX, okay? Again, let me zoom out a little bit here. When this confirmed the 50-day moving average here back in the beginning of March, it was $258. Today, it currently sits at $304. We have an all-time high here at 305.66. So I'm going to go ahead. This is going to be this top trend line here. If FedEx can confirm 305.66, let's go ahead and take an entry there. Let's go ahead and use this Bollinger Band here at 300 as our stop. You can even put on a little bit more risk here. Use the 5-day moving average of 292. Again, a lot of risk. I would go 2-3 months out on your expirations there. UPS also on a tear. I mean, look at this run on UPS. Look at this run on UPS. They did have earnings here on April 27th. Earnings were great. Shot up. It's been on a 1, 2, 3, 4, 5-day run here. The only thing I don't like is that it has been on a 5-day straight green run here at 213.38. Let's see if we can get a little bit of continuation here. If not, a good dip buy on UPS for a potential swing is a back test of support at 202. If UPS can back test support 202, I feel pretty comfortable getting in here off of this supply zone. Off of this support here. Or if it comes out strong out of the gates tomorrow, let's look for a confirmation of 213.38. Let's put on a swing on UPS. All right, guys, I will see you guys all in the next video.